Trading with a full-time job can be very difficult, especially if you have to sit there and constantly look at charts every single minute. And this is why I personally swing trade. It's helped me to be very profitable and still be able to get my work done. Now, let me show you exactly how I personally swing trade. With swing trading, you're not constantly looking at the chart every single minute. Instead, you're creating a plan up ahead the night before and letting the trade play itself out. With day trading, you're holding a stock maybe for a minute, an hour, or an intraday quick move. Whereas with swing trading, you're holding the stock for multiple days or weeks. And long-term trading is when you're investing for months or years. Our strategy is going to be swing trading because it's able to fit around our job and still be able to give us some profitable returns based on our analysis for a specific ticker. Now, all over YouTube, you're going to see YouTubers talk about Lamborghinis and Rolexes and how they're getting all these nice fancy things with day trading. But the statistics are that 97% of the day traders fail and less than 1% are profitable. And this is why we swing trade, because we're doing analysis on a company's financials and their health, and also tracking the technical analysis to see what is the right entry and exit for a specific stock. Although the pattern day trading rule, where you couldn't trade more than 3 times in a 5-day session, is now gone, that still doesn't change the odds that day trading still is not as profitable as people think it is. And with your job, you're not really able to day trade even if you wanted to. Day trading requires you to stare at a chart every single minute. But with our strategy, we're only going to spend 15 minutes a day after work to evaluate how the market is performing and create a plan. So this is what we're doing with our 15 minutes. We're scanning our watch list, running the 6 checks, which I'll go over in a minute. We're setting bracket orders, and we're calling it a night. So what are the 6 checks? The first one is the trend. We're watching how the stock is performing on a technical analysis chart. We're looking for locations on when to enter, when to exit. We're looking for any traps that are set by institutions, any triggers on a 4-hour candle, the stop level, and our exit. So we're always checking where a stock is trending, whether it's an uptrend or a downtrend, and that's when we know exactly where to get in and where to get out. And I'll go over that exactly what our triggers are. So here's my strategy. Personally, I like to buy stock that is above a 50 SMA and is able to break out of the liquidity swing. Now, if you're not very familiar with what liquidity swings are, go ahead and comment liquidity and I will build an entire video exactly how the institutions trade and how we can profit off of that. So your stop loss is math. You're just not guessing exactly when to get out on a stock. The way you do it is you build your levels. You're subtracting 1.5 times your ATR. How many shares to buy is based on the risk factor divided by the entry minus your stop, and your risk is 2% of your account. This is what I found very helpful for me when I'm swing trading a stock. So know when to exit before you enter. Personally, I like to use a 1-to-2 risk to reward ratio. What that means is if I'm risking 6%, then I'd like my reward to be at 12%. So let the trade babysit itself. What that means is build your stop order and your limit sell order. That way, all you're doing is hitting buy and letting the trade do what it needs to do. So either you'll get stopped out with a loss because your analysis did not hold up, or you'll be able to take profit because your analysis played out the way you thought it would. Personally, I don't like taking a trade unless all my 6 checks are in place, or at least 4 out of 6. So a couple of rules that I like to follow. I try not to get into more than 2 to 3 trades at a time. That way I'm not risking more than about 4% of my account size. Also, I am very strict with my risk to reward ratio. So a lot of traders tend to blow up their accounts because they're chasing where the stock is trending instead of doing actual trend analysis. They're moving their stop loss orders constantly based on how the trade is trending. They're oversizing on a single trade by going more than 2% of their account, or they're just trying to revenge trade because they took a loss on a specific trade and then they're just trying to recoup their money. Very similar to a gambler's mindset. So on most nights, I'm not doing much, but the days I do trade, I make sure that my technicals are set in place and I'm putting my orders the night before. And another important thing I like to do is log my trades. This way I can go back and check exactly if my hypothesis played out the way I wanted to? And if not, how can I improve for my next trade? So try to win on small odds, and that way you're able to profit on your runners. What that means is even if you take a couple of losses, it's okay because the stock that does run will make up for those losses and put you in the green. So remember, do your 6 checks, put your risk to reward ratios, put your orders the night before. That way, when the market opens, it triggers your order and you have your stop losses and take profit triggers in place. And always remember to trade with some sort of conviction and not just off of what the market is telling you. So if you like this video, please like and subscribe. And if you'd like to see more educational videos, let me know in the comments below and I will post more videos on exactly how I personally trade and able to hold such a high win rate.